Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 26th at about 1:30 p.m. Eastern. Well, U.S. Federal Reserve policymakers sifting through the latest inflation data will find little to fuel a sense of urgency to cut interest rates, but also nothing to rule out the likelihood of rate reductions starting later this year. That was the view from financial markets and analysts following the PCE core price index reported this morning that showed inflation rose last month largely in line with economists' expectations and with what Fed officials themselves had said that they anticipated. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This, of course, is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $509.53, just 3% below the March 27th all-time closing high at $523.17. Now, we know that the SPY has marched up the red line, the 20-day moving average, ever since its lows at 409 in October of 2023. We know that it's now in its sixth month, or at least was in its sixth month of an uptrend, and a few days after, again, making this all-time high on March 27th, the SPY started to, it lost some of its energy. This time when it fell down to the 20-day moving average, and note that almost, with very few exceptions, almost since October, the SPY has stayed above the red line, the 20-day simple moving average. But 6 months is one heck of a rally, I'll tell you that. And once it fell to its 20-day and fell below it, it gapped up actually on this red day here. It gapped up to 523 right here. But then, if you'll notice, it fell to close on its low here at $513. And whenever you see a candle like that in a sideways pattern, it's kind of like, ouch, that's for sure. So you keep an eye on it, and now it finally fell below the 20-day moving average. And then once it fell below the 20-day, the SPY could not get back over the 20-day, and then the 20-day turned into a ceiling. And then the SPY slipped below its 50-day moving average, the green line, and finally fell to a low of $493.86. Now, in this past week here, of course, it's been earnings season. The SPY's been struggling to move higher. It's kind of like take 2 steps forward and another one back. It has been struggling to move back up to the 50-day and the 20-day to get back up there. But as we can see now, the 20-day moving average is coming in at, is coming in at $509.99. It just crossed over the 50-day that's coming in at $511.05. So that right now today, again, the SPY is trading at $509.53. So, but at least, moving into the afternoon here, it's got some strength. It looks like it's trying very, very hard, the SPY, to move above these two powerful moving averages that are moving down over its head. So our question is, looking at this chart, can the SPY form a base here? It has moved lower, of course, throughout March and April. Can it form a base here? And bases are typically sideways moves. Can it form a base here from where it can start healing from the downtrend and then potentially move higher? In the coming week, we'll probably find out. Basically, we have potential price support down here at 493, 494. We have near-term price resistance at 508 to 510 right up here. Of course, these moving averages and all of these little candles. And if price can move up, if it can climb up over the 20-day and the 50-day moving average, of course, that will be a bullish sign. And please remember also that next week will be, as I said, another earnings season week. So we've got that to think about as well. So let's keep an eye on it and see if it can at least stay above this 493, 494 zone right here. Okay, our next chart is a daily chart of the Invesco QQQ, symbol QQQ, which of course follows the very important NASDAQ 100, the top non-financial stocks in the NASDAQ stock market. This is the ETF where the big momentum stocks reign, like Alphabet, NVIDIA, Meta, Microsoft, Amazon, all of those companies. And as I captured this chart, the Qs were trading today at $432.25. The Qs are trading 7% below its all-time closing high on March 22nd at let me see the closing high here. I had it March 22nd at it might even be this one right here, at $466.38, $466.38. And again, that's 7% below its all-time closing high on that day. Now, we all know, of course, that the Qs made a low back here in October at $342. Then as interest rates came down, the Qs climbed in a very strong uptrend, moving up. It's, for all basic purposes, a little dip here in December, January, but it moved right up its 20-day moving average. But if you back up and look at this chart, you can see how the enthusiasm was that price traded at a premium way high above the 20-day moving average for some of November, December, and into January and February. But then you can see how price started to falter a little bit, and it's like it got closer and closer and closer to the 20-day moving, which makes sense. That's how it works. So it got closer and closer to that 20-day stairway and running out of energy here. And again, climbing up to the all-time high at $466.38. Hey, that was a 27% gain. That is very, very good. Then in early April, we saw weakness set in here. We saw the 20-day moving average collapsing onto the 50-day moving average. We knew price would break down. It did. It did so on April the 15th, and then headed down to, it just kept right on going and headed down to 413 on April 19th. Now, like the SPY, it's managed to move higher. It's a grudgingly kind of a staggering move higher, but it's definitely moving higher again from that 413 low. And today, again, it's trading right now at $432.25. Now, as we move into another week of earnings, again, the Qs have potential price support at 413. We want to see if it can build a base here. Maybe it goes up and down, but maybe, hopefully, it holds those 413 lows. And it has resistance at the 20-day moving average and up here at the 50-day moving average coming in at about 440. So it will be interesting to see with these two moving averages. The 20 is at $433.09. The 50 days, I'm going to say right about 435. So we'll have to see if price goes sideways because of earnings season and maybe geopolitical news, or if actually it can break up. If it can get up and over that 50-day moving average, of course, that's very bullish. But again, we want it to stay above 413. Our last chart today is one we haven't looked at in a long time, but when I saw the pattern, I kind of liked it. We're looking at a daily chart of the iShares U.S. Oil Equipment and Services ETF, symbol IEZ. It has 31 holdings. Top holdings include Schlumberger, Halliburton, Weatherford International, Baker Hughes, and the Noble Corporation. Now, when I captured this chart today, the IEZ was trading at $23.14. just below the 20-day moving average, coming in at $23.53, but above here where the 50-day is crossing over the 200-day, which is a positive sign. So the 50-day is coming in at $21.61. The 200-day is coming in at $22.60. So that's, again, the 50 is crossing over, at least at this moment, the 200-day moving average, which is positive. I compressed this chart so you could see more of the time frame I wanted to talk about here. So if we look back here, we can look all the way back to September of 2023. We can see that the IEZ made a relative high here of 25.50, then started falling, and it fell down to October lows. Of course, everybody had October lows, didn't they? It fell to October lows at about $22.50. Climbed up here and then fell back down to I'm losing it here. Then fell to December lows. It climbed back up right here, then started falling in a downtrend below its 20-day moving average and fell down to December lows at $20.23. Now you'll say, gee, Toni, this doesn't look anything like the SPY or the Qs. And that's because oil is the biggest highly traded commodity in the world, and commodities do not trade in the same patterns normally that our S&P and our NASDAQ and all the broad market trade at. So oil is a different ballgame. It fell all the way down here to December lows at 2023. Then it rallied real hard and fast up here to the December high at $22.71. Then it fell to January lows at $19.73. Then it rallied real quick back up through the 20, 50, and 200-day moving average, but that 200-day ceiling was just too hard to get over. So it fell back down to retest the January lows, fell back down to the February low at $19.64. Then, started to rally and really trading at a high premium to its 20-day moving average. It rallied all the way up to the April high where it gapped open at $24.83. So that was quite a move. And of course, as I said, trading at a premium to its 20-day, which is possible definitely for assets, but they can't keep it up forever. So then it turned around, made a U-turn, fell down to April lows at 22.30 down here, back below the 50 and 200-day moving average, but then turned around and started rallying higher, and right now, again, is trading at $23.14. So I like the pattern. Of course, I'm not willing to lose a lot of money on this. In the coming week, if the SPY, I do want the SPY to be kind of positive. If the SPY can remain positive, and if the IEZ can stay above its 50-day moving average, which again is coming in here at $22.61. It's a green line. Just call it $22.60. If it can stay above that, I will add a small position to my trading portfolio of the IEZ. The stop is going to be at 22. If and when the IEZ can rise up here to 25, and that's about a little above the prior high, if it can rise above that, and it may take some time to do that, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the IEZ in the coming week. Now, if you'd like to become a more profitable trader, now is a great time to check out my online training programs because we've just lowered our prices to make them more accessible to everyone. From our ever popular 7 Steps to Successful Trading to how to swing trades successfully. This is a good market for that. Trade the trend to profits. I always love trend trading. How to read charts is great for novices. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. And we definitely have some opportunities coming up in that arena. You will discover how these timeless online programs can help you earn more money trading quickly and easily. So be sure to check them out by either going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.